that by 100, and for the week, happy to say that we did gain a percentage of 20. How's it going? It's Rocky. Welcome to week number 4 of what I like to call my 5 to 9 after the 9 to 5. I'm your average, or I guess below average, futures trader, and I share my content really on my experience trading the micro E-mini futures. Now what we see here is the hourly chart for the week, and what that means is each candlestick represents 1 hour. And if you check out the link above, it was a pretty rough week for me last week, and I told you all that I'm pretty much just gonna observe the market this week and see if we had opportunities to go in and out. And basically what I'm showing here, I did, put a circle on it because it is a loss, just to pretty much show you that I had to de-risk a little. So Monday was pretty hectic, and I'll show you that if you wait a bit on the daily chart, but pretty much I had to de-risk a little. And that's the reason why I added 3 more contracts right here, and I sold 3 contracts as we were higher a bit. And really that's a way for me to pretty much understanding what FIFO is, which is first one in, first one out. And essentially what I did was I sold some that I had at a higher average at a loss, but basically I averaged down by buying lower. That way it will help me to pretty much manage any potential margin calls this week, and I'm glad that I didn't get any margin calls, so I was able to manage really the cash balance that I still had on my account. And what I also wanted to show you essentially from this chart, normally I'll show you how I made for each trade, but since essentially I'm still holding the same exact trade from last week, I'll just tell you how we did on mark to market. So with futures, essentially at the end of the market, so that's around 1 p.m. Pacific time, anything that you have unrealized becomes realized. So that's essentially what mark to market means. So on this first day here on Monday, we had a mark to market gain of $1,290.74. And then on Tuesday, at the end of the market, we had a mark to market loss of $850.26. And then on Wednesday, another mark-to-market loss of $650. And then on Thursday, just a bit of a gain, mark-to-market of $162.58. And thankfully, Friday, it was nice power hour push. I actually did a little YouTube short on the link above here. And that was a mark-to-market gain of $3,036. What I'm showing here is the daily chart, and essentially what that means is each candlestick represents 1 day. And before I point out to you how volatile this week was in trading, I pretty much want to go to the basics of how it is to read a candlestick. Basically, my assumption is if you're trading futures, which is a lot more, leverage and a lot more advanced in a way because there's a lot more risk involved, I would like to assume that you already know how to read a candle. But for those of you that probably are just curious, wanted to know what a futures is like, I want to basically point out how it is to read a candle. And I'm going to basically do that by just snipping an image here. Don't mind me because my editing skills still needs to level up. So I don't quite know how to do the fancy animation to do this just yet. So I will do it the old school way, I guess. So we'll focus on a candle, and I want to pretty much point out the important parts. So basically, when a candle is green here, it means that it closed higher than what it opened at. So what does that mean? So what that means is at the beginning of the day, it opened at this level right here. So that's where it opened at. And basically, at the end of the day, this is where it closed at, which is the top of the candle. And then now the other part that's important to know is the wick. The wick is, the line that you see in the top and the bottom. So what that means is for the day, this lowest level right here is pretty much the low for the intraday. So that's the lowest point that the price of the stock, the future, or whatever commodity you're trading is. And basically the top of that wick would be your highest for the day. And the reason I'm pointing all of this out is basically this is very important for you to pretty much understand how to look at it if you're doing technical analysis. And basically, a lot of folks, they like to pretty much memorize all the different patterns. It's good for you if that works for you. For me, not really, but it's just one of those. It's good to know in the back of my head, but I don't quite follow it. So that's for a green candle. So the next one I wanted to pretty much show you is the red candle, which is essentially the opposite. So with the red candle, what that means is if it's red, basically it opened on the top of the body of that candle. So right there, that level right there. And on that day, it means that it closed on this level right here. And that's the reason why it's colored red. So it opened from the top, it closed in the bottom. And the same thing with the wicks. What pretty much shows you is for that day, the intraday, on the top of the wick, that was the highest price that stock, commodity, again, mutual fund, index fund, whatever you're trading, cryptocurrency even, that's the highest level it was for that day. And basically the bottom of this wick means that that's the lowest the price of whatever you're trading is for that day. And the reason I wanted to pretty much show you the basics of that is, first of all, on the top here, I want you to pay attention to O, H, L, and C. So O means open, H is high, L is low, and C is closed. And so pay attention to the top here, but I'm going to put my cursor right on Monday, which is one of the craziest days I've ever seen in trading. So if I put it there, and if you look at the numbers on the top, you can see that the high was 34,409 and the low was 33,033. What does that mean? That's pretty much 1,100 point delta. So that's a pretty crazy swing. So account statement this week, again, we're just really watching the market, managing our risks. So we're not going into margin call and really gonna play the long game on this and hope that it recovers most of our losses from last week or get to a comfortable point where I can go back to really trading daily in the evenings. So if we look at our account statement here, it goes from pretty much Sunday, the 23rd to today, the 28th. And if we look at our description, you can see there were no deposits or withdrawals, but we did have mark to market every day because I'm just holding on to those contracts. So mark to market here, 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 and here, which is essentially, if you go back to the hourly summary that I had, those were the values that I was sharing earlier. So our ending cash for the week was $17,535.40. And our starting cash was $14,546.34. So we have a total recovery of $2,989.06, just a bit short of $3,000, which I am quite happy with. So if we divided that by 40 hours, which is the typical full-time work week in the US, that would be an hourly rate of $74.73. And as a way to measure really your progress, I recommend doing it in a percentage wise, because my chapter 10 or 15 or whatever could be different from your chapter 100, right? We're all playing with a different size of money. So putting it in a percentage is a good way to really measure how you're doing. So since we had a net profit this week of $2,989.06, I'll divide that by our starting cash of $14,546.34, and we'll multiply that by 100. And for the week, happy to say that we did gain a percentage of 20.55%. Anyway, again, that's our content for the week. So pretty much for the week, I'm really just observing, hoping we can get to a point where we can take the account back and go back to our regular way of trading. But I just want to show you how I'm mitigating my risk, avoiding any margin calls, and this is how I'm recovering from it. Hope you enjoyed that content. Please do like and subscribe if you like what you saw. But if not, give me another chance, and hopefully on the next one, you'll like what you see. All right, have a good one.